Thanks for joining us today. My name is Tony Zhang. I run the product strategy team here for Options Play, and today I'll be giving you guys a full platform walkthrough. Before I get started, I just want to talk a little bit about how we started this company and why we started this company. We started this about 4 years ago with the intentions of really revolutionizing the way you view options. And what we did is we looked at the trading platforms that are available, we looked at how we traded ourselves, and we noticed that traders typically had a lot of screens because they needed to look at a lot of different things to trade options. And we realized that a lot of traders had to go to different places to get all the information they needed to place a trade. So number one, what we wanted to do is we wanted to condense everything down so that all the relevant information you needed can be either automated or presented to you on one screen. The other problem that we saw at the time was the option chain. The option chain, while very useful and very good at helping you quickly find strategies that you wanted to trade or quickly find the strike prices that you wanted to trade, for lack of better terms, sometimes there were just too many options. It's really difficult to compare one expiration to the next, let alone trying to compare one strategy to the next. So if you wanted to compare buying a stock to buying a call or buying a call to a call spread, you couldn't do that from the chains. Lastly, you also couldn't get some of the analytics you needed to decide whether you should buy an at the money call or an out of the money call. Things like break even numbers, risk to reward, things like that. You couldn't quickly decipher that from looking at a chain. So that's why we really wanted to set out and create a platform that changed the way people looked at options, changed the way people explored and played around with the different strategies to find new ones and learn new ones. So that's how we came about to creating this platform that you see today. And that's what I'm going to walk you guys through. So for those of you that are new, before I get started, I want to point out we do have a guide flag here at the very lower left-hand corner. If you're new to options trading or if you're new to our platform and you're unfamiliar with some of the terminology or the terms, just simply hover your mouse over any term that you're unfamiliar with and it'll give you a quick breakdown of what that means so that you can quickly understand what you're looking at on your platform. So with that, I'm just going to walk you guys through the platform. For those of you that have never seen this platform before, it's divided into three sections. We have our trade ideas and watch list here on the left, our equity analytics panel here in the middle, and then our trading and income panel here on the right. This is designed to help condense your workflow so that everything you need in terms of what, why, and how is on one screen. So on the left-hand side, we have our trade ideas and watch list. This is giving you an idea as far as which symbols you should be taking a look at every day. So with trade ideas, these are fresh bullish and bearish scans that we scan for every single morning so that you have fresh ideas that you can filter by bullish and bearish, market cap, sector, as well as the scans. And then we have our watch list functionality for those of you that like to set up a watch list with the stocks that you want to look at, as well as some predefined ones that we've built for you that covers all the individual sectors so that you can quickly look at which sectors are performing and have a deeper dive within each sector so that you can take a look at individual sectors and the stocks within those sectors very quickly. In the middle, we have our equity analytics panel. This is designed to help give you technical snapshot data so that you can quickly decipher how a stock is performing, both from a historical trend perspective as well as relative strength, giving you support and resistance levels that you typically will want to look at. For options traders, this is very important in helping you decide which strikes to buy and sell. And then things like earnings, dividends, and price action data that you typically may have to go somewhere else right there on your screen so you have that relevant data available. And then once you have your directional view on the underlying stock, then we can leverage that into either a trade or an income strategy, depending on what you're primarily looking for. So if you're interested mostly in directional plays and trying to speculate on a direction, the trading tab is going to be where you're going to be spending most of your time. This is designed to quickly help you find bullish, bearish, neutral ideas very quickly without having to pull up that full chain and scan for things and look for things first. It's present strategies to you right up front. This really allows, especially newer users, to be able to explore these strategies and understand them and compare them so that you can start to learn them. And for those of you that are trading actively, this allows you to very quickly decipher and find the strategies without having to do a lot of searching, and very quickly say, I'm bullish on a stock, show me some strategies, or I'm bearish on a stock, how can I take advantage of them? And then for those of you that are primarily stock traders that maybe are looking to generate some income using cover calls, or you're looking to acquire a stock, selling short puts as an alternative to doing that, the income tab is where you're going to spend most of your time to allow you to, again, quickly find income strategies that make sense for your portfolio. And I'll show you guys how you can customize this to your own time frame and risk tolerance so that the income strategies meet your personal preferences. So with that, I'm just going to walk you guys through an example of how I would use this platform, and then and then show you guys some of the functionality and how you can customize this to fit your own personal style. So when I first start out every single day, I like to look at the overall market first before I look at any individual stocks or sectors. So here I have the S&P 500 up. This is usually where I start off with every day. I want to get a feel for where the overall market is headed, because that will help create my template for the day. So here we're looking at the S&P 500. It's recently has been fairly sideways in terms of price action. As you can see, the 1 month trend is mildly bearish. The 6 month trend is bullish. This is always available to you here in the upper left hand corner, so you don't have to pull up the S&P 500. You can always see what the short term and long term trend is. So the 1 month trend is relatively mildly bearish. So if you're a short-term trader, you might have a more bearish bias. If you're a long-term trader, you can see the 6 month trend is still bullish. So if you're a long-term trader, you might be looking for bullish opportunities. If you're a short-term trader, you might be looking at more bearish opportunities. But let's dive a little deeper. As you can see, not only do we show you where the current trend is, we actually show you how that trend has changed. So as you can see here on March 17th, that's when the S&P 500 went from both 1 month and 6 month trends are bullish to where the 1 month trend has turned neutral. And then subsequently since then, that 1 month trend has continued to deteriorate and turn mildly bearish. And this 235 level has been an interesting level to keep an eye out on, because the market kind of just keeps trading right around this level and is kind of really consolidated around that 235. So in this particular case, I don't actually have a strong view towards one way or another. I think the markets are actually quite neutral. It's really lacking some momentum here, so it's hard to say. There's hard to say that there's a strong bullish or bearish bias here. So in this particular case, I typically will look a little deeper into the actual sectors themselves, because one of the things that we've seen so far in the last since the election is really the market sometimes may be very stagnant. However, the individual sectors are actually moving quite a bit. So one of the things that we did is we created a sector spider ETF watch list for you. And I like to sort it by the score, because the score tells me relative strength. So this allows me to quickly quantify which sectors are strong and which sectors are weak. So depending on whether you're looking for bullish opportunities, you typically want to spend most of your time looking at the strong sectors. If you're looking for bearish opportunities, you typically will want to spend most of your time on the weaker sectors. But today, I'll point out a couple of them that I think is interesting. I'm not going to go through all of them, but I'll go through them just so that you can see the flexibility in showing you how you can use this trading platform. So I'm going to look at energy here because it's an interesting sector that I've been watching for a while. As you can see, it's got a score 4, which means it's one of the weakest sectors in the S&P 500. But what I do think is interesting is that the 1 month trend has now turned mildly bullish, which it was bearish for quite some time. As you can see, this sector has continuously moved lower since probably even, let's see, it's moved continuously lower since December here. As you can see, a clear downtrend. Recently, it's got a bit of a jump back higher. So what I've been looking at is this kind of 71 level on energy, because 71 was support here in early February. It was support again in late February, and then it finally broke that support in early March. But then it came back to retest that as resistance in mid-March, late March, and then again in early April. So the question here is, where is energy headed? Is it going to head back lower? Is 71 going to hold as resistance? Or is it potentially going to break higher and test back up to 74? So this is an interesting sector to look at because there's potential moves either higher or lower here in this particular sector. Another interesting sector is financials, because this is one of the strongest sectors in the market that has recently started to pull back. So it's got a score of 7, but as you can see, that 6-month trend has now turned neutral, and that 1-month trend is actually red. So let's take a look at that. So as you can see here, on March 17th, that's when the 1-month trend turned neutral. So this was one of the strongest stocks after, one of the strongest sectors after the election. And on the 17th, the 1-month trend turned neutral. And then on the 21st, both the 1-month and 6-month trend turned bearish and neutral. So this is a strong signal that the financials may have topped and started to come lower. So this is an interesting sector to watch out as well, to see if this sector can continue moving lower down to the low 22s. Or even potentially lower. So these are two sectors that I'm just highlighting, but you can use this tool to very quickly look at any sector and gauge what the strength and trend is. Healthcare, relatively weak sector, so score 4, so this is on par with energy. But as you can see, this ETF has pulled back again on the 17th as well, where the 1-month trend turned neutral and has really been trading relatively sideways. There's not a lot of momentum in this particular in this sector, so it's not very interesting to me. But this allows you to very quickly scan all the sectors within a few seconds, and know exactly kind of where each sector stands. I'll just do one more example: XLY, consumer discretionary. This is a score of 6, so relatively neutral, but slightly on the stronger side. As you can see, the 1-month and 6-month trends are bullish. Again, this is also lacking a lot of momentum, so it's really been kind of sideways between 86 and 88 for the last month or so. So there's not a lot of excitement here, but I do think energy and financials are two sectors that I'm interested in taking a look at. So if I'm interested in energy, what I can do is I can just pull up the energy sector. And this allows me to very quickly look at all the energy stocks and look for possible opportunities. So again, I usually like to sort my watch list by the score because it allows me to easily quantify which stocks are strong, which stocks are weak. So as you can see, the ones that have a low score and a red arrows, these are telling me these are weak stocks with bearish trends. The ones with the low score and the green arrows, that means these are weak stocks, but maybe they're starting to turn around. And then on the other end of the spectrum, the ones with the high scores and the green arrows, these are strong stocks with bullish trends. So these are strong bullish opportunities. So this allows me to very quickly quantify and look at a list of stocks without having to pull up each individual one and know exactly kind of where everything stands. So one of the ones that I want to look at today is TSO. And the only reason I want to look at this is because I think it's at a turning point that's interesting, and you can make a case for either bullish or bearish. Because this way, this will allow us to look at one stock and look at both opportunities and see how you can leverage options play to find either bullish or bearish opportunities. So TSO is one of the energy stocks, which we said is possibly turning around, could potentially bounce higher and go back higher, or it could bounce lower and continue lower. So we're not sure where that is yet. I'm going to continue monitoring kind of the energy sector and oil prices. But when we're looking at TSO, as you can see, it's right trading around this 78 support level, which has been an interesting support level because it's been support for quite some time since September. So the question right now is this going to bounce off of support and go higher back to that 86, 87 level? Or is it going to break that support and potentially drop all the way down? The next support we see here is closer to around 69, 68. So there's a lot of room on one way or another. And depending on whether you're bullish on oil or bearish on oil, you can take different views. So one of the things that we do is, number one, we calculate the support and resistance levels and let you know where that next resistance level is. As you can see, it's about 10% away. And if it breaks that support, and it's about a 12% drop to the next support level. So a decent size move to one side or another, regardless of whether you're bullish or bearish, here's an opportunity that you can potentially take. So I want to walk you guys through how you can use options play to leverage either bullish or bearish view on this underlying stock. One thing we do want to pay attention to here is that there's earnings in 25 days. So keep that in mind in the back of your head, that that is a potential catalyst for this stock to move. So, and that's about 5 weeks out, or I'm sorry, about 3.5 weeks out here. And it does pay a quarterly dividend, letting you know the price action currently is in a bearish trend and it's testing that 78 support level. So this is all relevant information for you guys to know before you leverage a trade. So let's look at a couple of things. Number one, when you're pulling up any stock, you're going to always have two options here. This is for the traders. These are people that are looking to speculate on direction. You can click on I'm bullish or I'm bearish and always be presented with three strategies. So let's start with I'm bullish for a second. Let's say, for example, that I'm bullish on energy. I think oil prices are going to recover, and I think this thing is going to bounce off that support level like it did the previous few times and make a run back towards that 86, 87 level. So if that's the case, I can click on I'm bullish, and without ever having to pick anything in terms of on a chain, you don't have to pick an expiration, you don't have to pick a strike price, you don't have to pick a strategy. We will always present you three bullish strategies. And these strategies are the three most popular strategies by far in terms of trading volume. And so if you're bullish on TSO, first thing you can do is you can buy the stock. Right? So for those of you that are new to options trading, this is the strategy that you're most familiar with. For those of you that are exploring options or getting into options, buying a call option is the simplest of option strategies that you can take. And then lastly, for those of you that have a bit more advanced or a bit more understanding of options, vertical is a more advanced strategy that has some additional benefits to trading compared to just buying an at-the-money call or buying a call itself. So what this does is it presents three strategies to everyone. If you're bullish on TSO, you don't have to pick anything. We'll present the starting point to you. And these starting points represent the majority of trading volume. And what we do is we provide tools for you to help you understand each one of these strategies, fine-tune them, and make sure that you understand your risks before you place any trades. So number one, what you'll notice is you have these options play score. That's one of the first questions I get asked every day is, what is the options play score? So most trading platforms will give you a breakdown that looks like this. It'll tell you important things like the costs, the max reward, the max risk, the probability of profit, break even, and days to expiration. This is pretty standard on most trading platforms. However, as you can see, these numbers are not always easy to wrap your head around if you're looking at them and trying to compare them side by side to say which one's better. And that's because they're not on a level playing field. On the buying call and the buy stock, you have unlimited max reward, right? But that only happens if the stock goes to infinity. What are the chances of that in the next couple of weeks or in the next month or so? It's pretty low. So why even try to compare that with a strategy that has a max reward of $621? How do you even make that comparison? You really can't. And you were trying to buy a stock that costs almost $8,000 versus buying a call that costs $445. How do you compare that? You really can't. So that's why we created the options play score, which is really telling you approximately how much potential reward there is on a trade or how much green there is on your graph versus how much red there is, or what is your potential risk or what is your potential losses on this trade. And what we're doing is we're just weighting the two by each other to let you know what is the true risk to reward of each one of these strategies. And instead of trying to compare what happens if the stock goes to infinity or what happens if the stock goes to zero, we look at what is a reasonable range for this stock to trade in, and then we look at what is your potential risk and rewards within that reasonable range. This way we can compare these strategies side by side, apples to apples, as opposed to trying to compare something with unlimited risk to something with limited risk. It just doesn't make sense to do that. So by putting on a level playing field and giving you this risk score, you can easily see which strategy gives you the best risk to reward ratio, and then highlights that for you with the green check mark so it's easy to understand. So that's number one, is to understand what the risk to reward on a trade is. And I think the biggest benefit of this is not necessarily telling you which one has the highest or the best risk to reward, but more importantly, what it does is it highlights when a trade where the risk to reward is not very good. So when you're looking at a chain, if you're looking at the May 19th 77.5 call and you're seeing that it costs 445, unless you've been doing this for a very long time and you're crunching these numbers in your head, you might not know that 445 is a little too rich to be paying for this, and the risk to reward on this is actually not good at all. But the options play score makes that abundantly obvious to you, even if you've never traded an option before. It lets you know that the risk to reward on this trade is not very good. As you can see, it's got a red circle around it. And this is all color coded so that you don't have to memorize the scores and know which scores are good, which scores are bad, because red means bad, yellow means okay, green means best. So I'll show you that in a second. Once you have these three strategies in front of you, we have what's called a P&L simulator. This is one of the coolest functionalities of this platform because it allows you to simulate any given scenario and see how these strategies will actually perform. So we talked about, if we're bullish on the stock, we think the stock may be headed towards back to that 87 level. So we can type in, we think it's going to head to 87, and then you can see very quickly which one of these three strategies gives you the highest return. So in this particular case, if you bought the stock, you'd be up 10%. If you bought this call, you make a very nice 113% return, even though it's got a score of 77, which means the risk reward's not good. But if you're right, it still gives you a great return. And then lastly, if you had bought this vertical and you were right, you make 150% return, which is why this box is highlighted blue, letting you know that this strategy gives you the highest return. So again, everything is color coded to help you quickly decipher which strategy has the best risk to reward, which strategy gives you the highest return if you're correct, and also if you're incorrect. What happens if you're bullish on TSO and it falls through that support and goes all the way down to that 69 level we're talking about? Here we lose $1,000. Here we lose $445. Here we lose only $379. So as you can see, in many different scenarios, whether you're wrong, whether you're right, this strategy here on the right gives you both a higher return if you're right, but also less risk if you're wrong. And that's why this strategy gives you the highest options play score, is we're looking at all the different possible scenarios and weighting them by each other and letting you know if you're right, what is the outcome? If you're wrong, what is the outcome? And letting you know what that risk to reward or what that balance is. So that's really the benefit of the options play score. So you can use this tool to find, we talked about the stock moving to 87, but we also know that there's earnings here on May 2nd. So maybe you might think that on May 3rd, the day after earnings, the stock really jumps to 87. Then you can change, so you can create any scenario here. So let's say you think this is an earnings play and you think it's going to go to 87 right after earnings. As you can see, the picture is a little different. Now it's telling you this strategy here in the middle gives you the highest return. As opposed to here on the vertical, you only get a 96% return. So without talking a little bit about each one of these three strategies and the details of them, this tool, even if you know nothing about these three strategies, will allow you to quickly understand how you can benefit from each one of these three strategies and start learning. And we have a thing called a Plain English tab. This is designed to help you quickly understand more about these strategies and learn about them. So if you've never heard of what a vertical is, it will actually explain it to you in plain English. So this is designed to quickly allow you to learn, play, and explore options, even if you're new to options trading and have never done it before. This is something that you couldn't do from just looking at the chains. And then another thing is, I get asked a lot is, what happens if I have a different time frame, or what happens if I want to change the strike prices? And that's a great question. You can always modify any of these three strategies. Just by clicking on the modify button, you can change any of the parameters of the call or put or any of the strike prices and expiration dates. But what I tell users to do, the quickest way to do it, is you can use either the drop down menu to select a expiration date or strike price, but you could also just use the arrows. This is designed for a better user experience of options so that you can move everything out a couple of expirations, you can move the strike prices up, or you can move the strike prices down just by clicking on these arrows. You don't have to pull up a full chain just to change each one of these three strategies. And more importantly, for those of you that want to explore other types of strategies, if you don't want to look at a call or a call vertical, I get asked a lot, can we do credit spreads? And absolutely. We have a strategy constructor here that allows you to construct any pre-built strategy. We have about 45 of them, and you can set up a vertical. If you want to trade a debit spread, you can use this to set up a debit spread and compare the credit spread versus a debit spread. This allows you to very quickly look at different strategies and see which one's best for you. And you can change the expiration dates, the strike prices, all just by the click of a mouse, and move things up or down. It's very flexible and really allows you to create new strategies, test them out, look at them, see how they perform in order to decide whether it's a trade for you. Another thing is a lot of people, you don't want to necessarily get filled at the bid or the ask price. So we do allow you to price them both at the mid price or the bid ask, so you can see what the different changes are. If you do get filled closer to the mid, you can select these thing just by clicking on the price buy button. This is again designed to help you create any strategy, and you can create any three strategies you want and compare them side by side. This is one of the functionalities that we couldn't get from looking at the chains, especially when you're looking at options. You need to look at different options and compare them side by side. This tool really allows you to do that, and it puts it on a level playing field and allows you to test out each one of these three strategies using the P&L simulator and seeing which strategy performs best in any given scenario that you have. So that's how you can use this platform to look for bullish ideas if you're bullish on TSO. But again, if let's say you're a contrarian, or not contrarian, because you think energy is a weak sector, you think the stock is weak, you think it's going to continue going lower, you can click on I'm bearish, and now we're going to do the exact same exercise, but now for bearish strategies. So we think this thing might drop below the 78 support level and drop all the way down to 69. So what we can do is we can type in that scenario, and you can see which strategy gives you the highest return. As you can see, you get a 13% return if you had shorted the stock, 175% return if you bought the put, 188% return if you bought the put vertical. So again, this tool is the same as the bullish strategies. You have all the same tools to learn about the strategies themselves. Use the P&L simulator to see which strategy has the best performance. And then lastly, if you needed to modify any one of these, you can click on modify. You can change the expiration dates. Maybe you want to go longer term on this because you think it's going to take a lot longer to reach that 69 level. You can maybe pull up a later expiration, so you can change these expirations from May to August and see how these strategies perform if you move them out to August. As well as for those of you that are trading other strategies, just use the strategy constructor. I know some of you use neutral strategies like straddles, condors, butterflies. You can use that and set all of that up here. So if you wanted to trade a short straddle, you can set that up, compare that to a strangle, and then compare that to, let's say, a iron condor, which is more popular. So you can change this, you can change the wingspans, you can move the strikes up or down, all from this one screen. I remember trading iron condors on screens where if I wanted to move all the strikes up one, I'd have to go from here and change it here, and then go here and change it there, and it would take me a long time to set up that iron condor, especially if I needed to make a small change, just like moving all the strikes up one or moving all the strikes down one. This allows you just by the click of a mouse be able to move all the strikes up one, move all the expirations up, out, or in very quickly without having to do a lot of that fiddling. This is designed, again, to save you guys time and provide that flexibility so that you can set up any strategy side by side and really compare them. So that's just a bit of showing you kind of the flexibility of this platform, all the things that you could potentially do, as well as, I talked about a little bit before, the options play score is designed to give you an idea as far as what the risk to reward of each one of these strategies is if the stock stays within a reasonable range. And the reasonable range that we select is the standard deviations. So if those of you that are familiar with options trading, you've probably heard of this term, but what you can do is you can actually set different expected trading ranges. So if you think the stock's really going to take off because earnings is going to cause volatility to explode, or you think oil markets are going to volatility is going to pick up, you can change these parameters to where you think the stock's going to trade, and we'll actually recalculate the probability or the risk to reward of each one of these strategies. So if you expect the stock to trade in a very wide range, as you can see, these short straddles don't perform as well because you have unlimited risk on both sides. But this is a tool that allows that flexibility so that you can customize these strategies, as well as even customize where you think the stock's going to trade in, because then we can recalculate your risk reward on those expected ranges. So that's just a little a walkthrough of how you can use this platform to find trading strategies, whether you're bullish, whether you're bearish, neutral, or even you think the stock's going to really take off. You can look at long straddle or long strangle strategies here and compare them side by side. So you can construct any strategy you can imagine, if you will, on the trading screen. So for those of you that are on the other hand, for those of you that want to trade for income strategies, you can click on the income tab. So this is more so for those of you that buy and sell stock. Maybe you hold some Apple stock or IBM stock that you've held onto for a while, and you plan on holding that stock for a while, and you want to generate some income. So what I usually do is I set up a watch list just for my buy rights. Here are all the stocks that I own in my account. And what this allows me to do is quickly look at eBay stock, which is the stock that I own, and then very quickly scan for cover call or short put ideas. Now, if you're trading primarily for income, what I do suggest for you is before you get started, there's a button here on the bottom called Default Strategies. This allows you to customize each one of these income strategies for you. You can customize everything from time frame, so depending on how actively you trade, if you're a very active trader and you look at your accounts every day, choose the short term because you want to trade cover calls and short puts that expire within a month or two. If you're a long-term investor and you don't have a lot of time to look at your portfolio, you might want to select the longer term, and then most of you will probably fall somewhere in the middle. And then you can select your risk tolerance. And if you don't know which one you are, it gives you a bit of a guidance. So if you're conservative, your main objective is to seek to minimize the risk of losing your stock. So for those of you that have held on to legacy stock or have concentrated stock with low cost basis and you really want to make sure you hang on to them, you want to choose the conservative risk tolerance. For those of you that are really looking to maximize your yield, you can choose the aggressive track, but most of you will probably fall somewhere in the middle on the for optimal, which seeks a balance between risk and reward. So you can set these independently for calls or cover calls as well as short puts. So if you like to sell short puts as as an alternative to acquiring the stock, you can use this to set the same thing for short puts. For me, I like to be short term, but when I short puts, I like to be a bit more aggressive because typically I want to actually own that stock. So this allows me to set a different risk tolerance for short puts as I do for calls. And once you save this as default, you're off to the races. You can click on any symbol, and immediately, just like the trading tab, you get a cover call and a short put idea that's customized for you. So when you click on, if let's say you're looking for cover call ideas, you can type in the number of shares you own. So let's say you own 300 shares of Microsoft. What it does is it explains to you the ideal starting point for you, which in this particular case is selling an April 23rd 68.5 cover call. It breaks down the trade for you so that you have all the analytics. And then especially for those of you that are new, it breaks down the trade in plain English. So it tells you that by selling the April 28th 68 and a half covered calls, you'll generate $102 in premium, and they produce a 9% annualized return based on historical volatility, with an 80% chance that this call will expire worthless. Really helping you guys better understand how these strategies will perform, what your expected return is, and what is the probability that you'll keep that income. And conversely, for short puts, you can do the same thing. Just click on no, and it'll present to you the strategy that makes sense for your time frame and risk tolerance for shorting puts. And once you're ready to trade, and this is something that you can do, is you can click on the trade button. And what we have is, number one, we have the details for how to enter this trade into your broker's platform so that you can enter them correctly. But more importantly, I think this was actually born out of necessity and out of the mistakes that we made as traders, is we have a strategy checklist. This is designed to kind of just make sure that you have one last step of validation, especially if you're new. I highly recommend that you guys go through this just so you understand your risks before placing a trade. So for the income tab, we check for a few things. Number one, we check to see if the probability of expiring worthless is good. Here it's relatively low, but that's because I'm getting pretty aggressive with my short puts, so I'm okay. I'm willing to take on that risk. It's telling me that I have a nice annualized return of 18%, which is great. This is letting me know, hey, there's earnings between now and expiration. This was something that we as traders a lot of times may have forgotten sometimes. As an options trader, there's been plenty of times, if you've traded enough times, where you realize that you got into an option strategy and next thing you know, hey, there's earnings in a week and I totally forgot to look at that. So this is something that we want to make sure you're aware of before you place that trade. And lastly, spread and liquidity. This is very important when you're trading options, is understanding how liquid something is. The problem is, and this is a problem that we're seeing in the industry, is that liquidity is getting pulled into fewer and fewer symbols. So it's really important for you to understand, is there liquidity in this option? If I get in it, can I still get out? So, and what we do is, instead of looking at open interest and volume to determine how liquid something is, we use the spread between the bid and the ask price. It's a much better gauge to determine how liquid something is, and it's something that we can monitor in real time, because open interest is only updated once a day, versus bid-ask spreads are updated in real time. So we can have a much better gauge for how liquid something is by looking at the bid-ask spread, and we give you some guidance as to where you can place your order based on that. So this is extremely important for those of you that are new, to take your time and go through the strategy checklist before you place a trade, just so you understand your risks. And I just want to highlight that on the trading side. So let's say I wanted to look at, let's go back to TSO real quick. And I just want to highlight for you again, if you were trading TSO, if let's say I'm bullish and I'm looking at this call spread, once I hit trade, as you can see, the strategy checklist here doesn't look very good. Well, that's really because you're really trading against a few things, right? Because we know that the stock is in a bearish trend. This is telling you're trading a bullish strategy in a bearish stock. So doesn't mean you can't trade it, but it's just you should be aware that you're trading against the trend. You're also trading against the trend of the market. We talked about the S&P 500 short term has a mildly bearish trend, so you're trading against the trend of the market. Your options play score is 97, which is pretty good, but it is also telling you that there's earnings between now and expiration. So you're trading a May 19th expiration, but there's earnings on May 2nd, so it's just letting you know to be aware of that. And lastly, spread and liquidity. This is telling you that this spread is not very liquid, and it recommends that you place a limit order near the mid price. So as you can see, it's trading by 328, by 384, which from a percentage standpoint is a relatively wide spread. Conversely, if let's say you were bearish on TSO and you wanted to trade this put vertical, as you can see, the strategy checklist is a little different, because now you're trading with the trend of the stock, you're trading with the trend of the market, you have an excellent options play score of 114, there's still earnings between now and expiration, and lastly, the bid-ask spread on this trade is also pretty wide, so it's giving you also the same warning to let you know you should place this order near the mid. So this is all designed to help you guys better understand each strategy, make sure you understand your risk, and have a one last step of validation before you place your order, so you know exactly what your risks are before you place that trade. And this is the tool that's really designed to help you guys quickly decipher that all from one screen without having to constantly go to one source for your charting, another source for your news, another source for your earnings and dividends data. Everything is available to you on the screen and allows you to quickly leverage any bullish or bearish ideas into a option strategy that can make sense for you. And just to point out, there are some times where you pull up a stock, you might be bullish or bearish on the particular stock, you might really like it for whatever reason, and you might get a message that looks like this. So here's a stock. As you can see, it's a very strong stock. It's got a score of 9. Maybe you're long-term bullish on this stock and you're interested in it. But as you can see, I get a very different message than the previous symbol that I was looking at. This call option here gives me a score of 37. That's pretty bad. So this is actually fairly common when you're looking at some of the smaller cap names. So don't be surprised when you pull up, some of the mid cap or small cap names and you see this type of call options here. This is fairly common. It's because these small cap names, the options are not very liquid. They're usually priced really wide. So what this means is that paying $90 for an at-the-money call is not worth it. The risk reward on this trade is just quite bad. So in this particular case, what this is telling you is that you should, if you're bullish on this stock, you should just buy the stock instead. And I just want to point that out because even though there are about 4,000 stocks that you can trade options on, only the top 200 to 300 names is really liquid. The rest of the names aren't very liquid. So just keep that in mind, that many times some people might be a little frustrated in not being able to find option strategies in the smaller cap names, but this tool is not only designed to help you find option strategies, but more importantly, prevent you from making bad ones. So just keep that in mind, that in the top 200 to 300 names is where we typically can find option strategies that make sense. But outside of that, a lot of times we just simply can't. And it's sometimes in those cases, you're just better off trading the stock and avoiding the option like you have in this particular case. So just to recap a little, this platform is designed to help you quickly find trade ideas and stocks that you currently want to watch using the trade ideas and watch list functionality. I highly recommend that if you're setting this up for the first time, to create a new watch list for yourself so that you can have the watch list that we have for you as well as a watch list for the symbols that you're interested in. Play around with the equity analytics panel. Type in some of the symbols that you're familiar with. Check out how they have performed. Look at the relative strength. Look at the 1 month and 6 month trends, because that will help you quickly gauge directional trend. And then once you have that directional view, use the trading and income tab. Click on I'm bullish or click on I'm bearish so that you can quickly see if there's bullish and bearish option strategies that you can leverage. And then if those of you that are trading primarily for income, make sure you go to the income tab, put in your default settings first. So set in your time frame, set in your risk tolerance, and then you'll be able to just quickly go through a list of stocks and very quickly find a cover call opportunity or a short put opportunity depending on which one you're looking for. So thank you everyone for joining us. I hope you guys have found this useful, and we'll be back to do more videos to show you guys how you can use this platform more in depth, specifically on the cover call ideas, as well as how you can use this tool for directional strategies. Thank you very much for joining me this afternoon. Thank you.